Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back KS family. This is a special episode on proving crypto's massive growth and investment potential. When we look at market size of selected assets in trillions, and this is global, cryptocurrency market is around $2 trillion. Gold 11.5, stocks about 120 trillion, and bonds about 124 trillion. You can see there's a lot of money out there, but the concept is crypto is really tiny. But what is crypto all about? It's actually the ownership layer of the next evolution of the internet called Web 3.0. Web 1, you could read things. Web 2, you could interact. You could read and you could write. You could leave comments, do all the things that we do now. Web 3 is the internet of value. It's about transferring money. One thing to note, when we compare the internet to the internet of value or cryptocurrency, we of course use the internet as a basis. The internet reached adoption through this particular S-curve. You can see the mobile phone curve, the cellular network curve, was a little bit faster adoption than the internet. What this bottom chart shows us is the adoption, that particular curve, inside the number of users here from 1993 to 2021. And what we're actually seeing is this little blip right down here. That's the start, that dotted line under there. It's really interesting that the internet realistically started in around 1991, but it became sort of more mainstream around 1993. That's when I actually owned and operated an internet service provider, providing dial-up access. I have a long history with the internet. And back in those dark days of the internet, the government tried to ban the internet. Can you imagine if they had succeeded? How different would things be now? Oh, can you imagine life without Netflix? So let's just look over the past couple of days at adoption. Ukraine has legalized the crypto sector. The president, Zelensky, signed a law that basically said crypto is now allowed. Now, what was the change of heart? Because this bill went across his desk a while back, a year ago, and he said, no, I don't want it. What happened? Of course, a lot of things happen in the Ukraine, but people all around the world reached out to the people of Ukraine and did crypto donations. Look at that, $85 million worth just now. That is so superb. So many beautiful people. Ukraine government received nearly $54 million. The Ukrainian NGO Come Back Alive, over 17 million. The Ukraine DAO, over 7.3, Unchained Fund 4.5, Aid for Ukraine 1.7. Wonderful stuff. Often governments are really against crypto. You don't have to look too much further than China to see that, or India, or actually the US. It's warming, but it's not like Ukraine. And we'll go through a couple of other countries to show you just how much embracing of crypto there is. Let's head across to the next country, Afghanistan. Afghans become crypto-friendly amid US sanctions. If we zoom out from Ukraine and we come down to Afghanistan, we can see Afghanistan is here very close to Pakistan, Iran. This particular article says that since the Taliban took over Afghanistan in August of last year, US authorities cut off financial sources to disrupt the state's economy. One particular person said, after the Taliban takeover, crypto spread like wildfire across Afghanistan. There was literally no other way to receive money. And many of the people in Afghanistan actually used point-to-point trading on Binance Exchange. The story in Afghanistan is quite interesting. Because the banks stopped working, people had to do something. They could have used barter, but they instead turned to cryptocurrency to trade and survive. And Afghanistan has become the 20th country fastly adopting crypto out of 154. That's from Chainalysis. Things can change really quickly, and it does give us an understanding. If the banks stop working, what would you do? Afghanistan started using crypto, and we can see Ukraine has actually passed that law legitimizing crypto as well. We're seeing an incredible amount of instability geopolitically around the world. I think that would be driving crypto adoption as well. So we've had a look at Ukraine, we've had a look at Afghanistan. Let's zoom in to Dubai in the United Arab Emirates. What's happening there? Late last year, Dubai wanted the World Trade Center to become a specialized crypto zone. And we've seen recently, in the last couple of days, the crypto exchange Binance wins Dubai virtual asset license. The key here is that the Middle East is one of the fastest growing crypto markets in the world. Between July 2020 and June 2021, they received nearly $272 billion worth of cryptocurrency, which actually represented 6.6% of global activity. That's quite a lot. What we can see here is the Dubai World Trade Center is currently setting up a specialist crypto zone, and Binance will start a blockchain technology hub in the Dubai World Trade Center and seed new talent and build a vibrant blockchain ecosystem. It's pretty cool to take a view on the Dubai World Trade Center to see where it actually is. Whoa, we're going in fast. That is where it is. That's the Dubai World Trade Center. Just something interesting. The Crypto Expo 16th to the 17th of March in Dubai is currently on. Okay, for our next visit, let's go traveling across to South Korea and see what South Korea has in store for us. The new president of South Korea is making South Korea crypto friendly. What a fantastic person. He's going to actually increase the tax-free threshold from $2,000 to $40,000 per year and exempt people from paying capital gains tax on crypto who don't earn more profits than $40,000. That's pretty cool. And he's also promised to allow initial coin offerings. They're currently illegal in South Korea, which means people have to actually go to Singapore or other countries to register ICOs. The CEO of Korea Exchange, KRX, said that the government needed to find ways to embrace the cryptocurrency sector, and he said there's about 5 million local investors with a daily market trading volume of about $12 billion. That's per day. Okay, let's take another trip across to Thailand. Oh, we're all over the place in this particular episode, aren't we? Thailand, the land of smiles. In an article from the Bangkok Post, Thailand in the blockchain era, with Thailand leading the world in the proportion of internet users owning cryptocurrencies, 20.1% of Thais aged 16 to 64. Well done, Thailand. Thailand was amongst one of the first Asian countries to draft new rules on the custody of digital assets, intending to strengthen investor protections. But it was a pretty bumpy road, and Thailand for a time wanted to ban crypto, as all countries do. But they actually figured out it's better not to ban it, it's better to adopt it, and especially the underlying blockchain technology. And they've said, with the use of blockchain technology, the financial industry, the banks, can reduce financial services infrastructure costs between US $15 to $20 billion per year by 2022. The Bangkok Post also says it also helped reduce the supply chain's energy consumption by 17% and could remove 15,000 tons of carbon dioxide from the environment each year. Wow, crypto is so good. It's so environmentally friendly. I also wanted to give you this story because I think it's really, really interesting. This is a little bit older. This is from November the 3rd, 2021. One of Thailand's largest banks is getting into cryptocurrency by buying the country's biggest crypto exchange. Siam Commercial Bank, in which the nation's king is the largest shareholder, said late on Tuesday, and of course this was a while ago, that it will acquire 51% of BitCub for 17.85 billion baht. That's about 535 million US dollars, valuing the country's biggest crypto exchange operator at 35 billion baht. Another interesting piece of news, the Thai Stock Exchange plans to connect crypto with its digital asset platform. There's a bit of a twist in this particular article. What basically it says, the Thailand Stock Exchange doesn't want to actually use cryptocurrencies, but it wants to use tokenized versions of digital assets in 2022 to gain access to investment tokens and utility tokens. But it wouldn't take much to actually open the floodgates on crypto after they do that. One thing that is really interesting in here, Thailand has scrapped the 15% crypto capital gains tax following a public backlash. Maybe we should all do a public backlash as well in our own respective countries. So it's good to see that so many different countries are adopting cryptocurrency, and it's not surprising that we're going to see massive growth in crypto. But this brings me to the real point of introducing those other examples. I'd really like to share this particular research report, Bitcoin and US National Security, an assessment of Bitcoin as a strategic opportunity for the United States, by Matthew Pines, National Security Fellow of the Bitcoin Policy Institute. So therefore, we're going to zoom across to the US. Bye Thailand, US, here we come. Whoa, just a little bit around the corner. This very recently released report talks about the changing world order and the potential impacts from a policy security stance on the US dollar. It is a very interesting report, and I'll leave the web link for this in the description of the video. What I'd like to do, because it's a 59-page document, is just share the key things with you. Have a look at this from Chainalysis, the illicit share of all cryptocurrency transaction volume, and just think about how big that volume is. From 2017 to 2021, in 2021, it was 0.15% of all transactions were illicit. That's not a big percentage, but if you listen to the mainstream media, you would think the illicit share of cryptocurrencies is in excess of 90%. This just shows what absolute rubbish actually perpetrates itself all around the world. The truth is that any criminal who wanted to use an immutable, that means unchangeable, public ledger to do their thefts on should have their head read. Their footprints will be there forever. That's really dumb. Okay, this is really interesting. This is Bitcoin compared to gold and fiat against key attributes of money. Money has these particular attributes. It's durable, divisible, fungible, portable, verifiable, scarce, and it has a track record. When we look at Bitcoin, Bitcoin's doing pretty well. It's got quite a few pluses in there. Something interesting to note. We had a Ukrainian diplomat who was arrested trying to leave the country with 140,000 US dollars, 68,000 euros, 12 kilograms in gold bars, and about 14 kilograms of gold jewelry. Look at all of this. All of that money could have been placed either on a crypto exchange through Bitcoin or any other particular crypto, or it could have actually been put on just a hardware wallet. And then none of this cash would have ever been picked up. I believe, just as we saw in Afghanistan and what is happening inside Ukraine at the moment, When the world goes into a war-based scenario, crypto becomes really, really attractive. Gold used to have that functionality. People, when, for example, a depression or recession hit, they felt there would be a run on the banks, and therefore they wanted gold. But gold is really hard to break apart. If you consider it this way, it's pretty hard to buy bread and milk with your gold bar. But you can use crypto for anything, literally. So where could you actually buy bread and milk with Bitcoin? You got it. You could go to El Salvador and you could buy anything. In fact, it's legal tender there. Okay, heading back to the US, what we actually see is that the global balance could change around quite significantly with what's happening inside Russia, and also what we actually find in the Middle East. There's a lot of oil that's concentrated around here, and there's very strong ties between Russia and the Middle East as well. In fact, the use case for US dollars when it comes to oil is very significant. Petrodollars are the US dollars paid to an oil exporting country for sale of the commodity. Looked at another way, you can say that US dollars are used to transfer energy around the planet. But there are some problems with the petrodollar. Iran, Iraq, even Saudi Arabia are not too happy with the US, and Russia's very upset with the US at the moment. In the 1980s, the US was the dominant trading partner for the world. In 2018, it became China. Because China has become the dominant trade partner literally all around the world, its yuan, its currency, you can see that it's grown substantially as in terms of growth as a reserve currency. And you can see this over time. This is really important to understand. The Chinese yuan is definitely the thing that is going to attack the US dollar's dominance. If we look at the circulating supply of China's currency, we can see it's a lot when measured in Bitcoin. It's about nearly double that of the US dollar. And you can see when it compares to the euro is quite small. But where is Bitcoin in all of this? If we go down, Bitcoin is 14th. It's actually larger, has more value than the Thai baht, the Russian ruble, the Mexican peso, Singapore dollar. You get the idea. Even the Swedish krona, the Vietnamese dong. Wow, Bitcoin is really getting adopted, and it's just at the start of its adoption cycle. The conclusion is pretty simple. Bitcoin is here to stay. It's not going away, and those who fail to adapt fail. This is a really, really good point that the author raises in this particular report. In this moment of crisis, the time for such thinking is now. Matthew has done a really, really good job in this particular report, and what he's saying to the US government, you need to embrace crypto, just like Thailand is doing, just like so many other countries are doing, or else there will be a brain drain. And it is the next evolution of the internet, so please don't muck it up. That's what Matthew's telling the US government, and he's absolutely correct. And of course, this is not just Bitcoin. When we look at all of these currencies, for example, we actually see that there's more than just Bitcoin on this list. Bitcoin is the 14th. And when we go down a bit further, Ethereum is the 31st. And there's other cryptos in this list. Tether, BNB, USDC, XRP, Luna, Cardano, Solana, AVAX. Just think about it. These cryptos are literally bigger than some countries. When I pull this particular chart up, hopefully it makes a lot more sense now. Cryptocurrencies are just at the start of their adoption cycle, and you can see countries around the world are adopting more and more and more. I hope this contextualizes just how vitally important cryptos are. There are some people out there that say the cryptocurrencies have absolutely no value. They don't produce anything, like gold. Gold is something that doesn't produce anything. They say the crypto has no cash flow. What about gold? What cash flow does gold have? A lot of economists and traditional finance people say that Bitcoin crypto doesn't actually produce any money. It has no cash flow. But think about this. When we look at the fee revenue on particularly Ethereum, OpenSea, Uniswap, Axie Infinity, Filecoin, it's really substantial. Over the past year, we had total revenue on the Ethereum network of $10.8 billion. That is a lot of money. Total blockchain revenue, the blockchain level 1s, 18.21, and total DApp level 2 revenue of 10.81 billion. To say that there's no money produced by crypto is absolutely and utterly logically flawed. There is revenue in crypto. And people are staking and getting a return on their crypto. There's currently $205.24 billion of locked value in the DeFi ecosystem. The entire world is going digital, and a lot of people don't understand the transition from the tangible to the intangible. And it's quite mind-blowing, actually, to think that the internet reflected the real world digitally, and the Internet of Value, Web 3.0, could have us living in the metaverse. Just like that research report said, crypto is not going away, and you are so very early, and things can only increase from here. Can you imagine when crypto actually explodes up in value? One thing that I want to leave with you is 2 years ago on May 27th, 2020, way before all the excess money printing, for the world's money supply, only 7% was physical. That was 2 years ago. Can you imagine what the percentage is now? I'd suggest it's around 2%. That means if all the people who had money in the bank wanted a physical banknote, I reckon probably 98 wouldn't get anything. Only 2 would actually be able to withdraw their money. This is actually why the major governments all around the world need to do a central bank digital currency. And of course that raises so many concerns. If you have an authoritarian regime and they have a digital currency, they will simply turn off the money supply to anyone that doesn't agree with their worldview. Absolutely. And there are countries that are already doing that. And people with money, they know this already. So they're actually hoarding away their crypto because that crypto will always be able to be used in a point-to-point network way. Just think about Afghanistan. If you put all these facts together, it makes so much sense that the cryptocurrency market is absolutely going to explode in value. And El Salvador is currently doing Bitcoin bonds. We would expect over time more and more countries to issue their bonds in Bitcoin. That will further explode the crypto market. Unfortunately, a lot of people think from a retail perspective and not an institutional perspective. When we look at derivatives, we actually see there's such things as futures and forward contracts, options, warrants, swaps, those kind of things. The notional value of those derivatives at a high end in 2020, 2 years ago, was $1 quadrillion. Can you imagine just a percentage of that derivatives value being represented in the crypto market? There's another thing that a lot of people are not talking about. When, for example, say New Zealand was to say, okay, cryptocurrencies are now legal tender, they could actually see an outflow of New Zealand dollars into other particular currencies like Ethereum and Bitcoin. It's not likely that New Zealand would do this at the present time, but many things are not likely that actually happened. In all probability, the route is slightly different. What these countries will do is introduce a central bank digital currency to their populations, and their populations will turn around and say, oh, I thought that crypto stuff was illegal and only criminals doing it, and now the government's doing it. Oh, yeah, it must be wrong. I must have misheard. Cryptos are now good. And that's exactly what the Chinese government did. It brought cryptos up, made them very, very popular for the populace, and then said, okay, we're going to replace crypto with their own central bank digital currency. Unfortunately, a lot of countries can't do that. Bitcoin and crypto has become too entrenched. But what will happen when they do introduce their own digital dollars, their own central bank digital currencies? They will cause money to leak out of their currency into cryptocurrencies. It is absolutely inevitable. CBDCs actually pave the way to cryptocurrency, which is something a lot of governments actually don't understand. But that's okay. That's governments for you. But when we see Bitcoin having this value being number 14, just underneath the Swiss franc and just above the Thai baht, when we look at that, when more and more CBDCs come in, of course, these major cryptos are going to get a boost because people inside those countries are going to say, oh, you know what? I might sell my house in Bitcoin. I hope you've enjoyed this special presentation. I think it's really important to understand where this number can go, the cryptocurrency market size. It's under 2 trillion at the moment, but over time that is going to absolutely explode. And when it does its 2x's, 3x's, 5x's, 10x's, when it does that over time, and it's got a lot of room that it can do that in, and there's a lot of systemic reasons that it will actually do that for, we're going to see incredible appreciations, incredible price increases in cryptos that you hold. You're so early and you're so lucky to be here. Wow, it's just fantastic. And I'm so appreciative that I'm on this journey with you. Inside the CryptoTradingKS Masterclass, I do deep dives like this all the time. It's literally a deep dive class. And my focus is to transfer my 30 plus years of financial experience to you, just one video at a time. In TR10, we actually go through current crypto adoption and a number of other things in different episodes. This is actually the structure from the CryptoTradingKS Masterclass. First thing, you'll learn the CTKS method, which updates all of candlestick pattern analysis and actually makes it applicable to crypto for the first time in order to analyze price action. And then we go to outside trends, into timing, real wealth, and then buying and selling. The whole focus of a crypto technical analyst is to scientifically track investor attention through the reality of price, but it's really about just making a profit from crypto and having a really beautiful life in the process. Crypto technical analysts are professionals just like doctors, lawyers, engineers. And you can say this is like the course, the university course, to actually learn that profession. And it is a little bit onerous. It is a Rolls-Royce class. And it's nothing like anything that you will see anywhere else. Because what I do is to share my 30 plus years of market experience. I also provide my charts and my indicators. Also, if you go across to the testimonials section, you'll see where and why I actually created this masterclass in the first place, and testimonials from some of our graduates who have gone through the masterclass, and some people who are still going through it as well. If you would like to learn the secrets of the crypto market, when to buy, when to sell, how to control stress, and how to actually leverage the volatility inside the crypto market, please reach out to a CTKS ambassador. Just come along to www.cryptotechnicalanalysis.org, hit ambassadors, and then you can actually go down and contact any of these ambassadors via Twitter. I hope you found the content useful, and I've left helpful links in the description of this video. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care, and see you next time. Bye for now.